Buzzcast.
Welcome to the Payments Innovation Alliance Buzzcast. For this episode, we've brought together representatives from the advisory committee to discuss and explore the latest trends, technologies, and innovations in the world of emerging payments. I'm your host, Chris Colson, Director of Innovation for the Federal Reserve Bank of Atlanta, and today we're going to talk about the latest trends in payments and what we can expect from them in the near future. Joining me are Andrew Gómez from Lipis Advisors and Mark Dixon from NCP, New England Automated Clearinghouse Association. Both these guys are experts when it comes to the topic of emerging payments. Mark and Andrew, thanks for being here and taking the time to join me today to talk about this exciting topic. Our goal is to share what we know and to help educate the general public and make them aware of some of these new and interesting types of payment technologies, solutions, and the influence they're having on the payments industry. But before we begin, I want to emphasize that the views expressed here today are our own and do not represent those of the Federal Reserve Financial Services, the Federal Reserve System, Lipis Advisors, or NCP. All right, with that out of the way, welcome Andrew and Mark. Before we get into defining emerging payments, can you guys take a few minutes and share a little bit about who you are, your backgrounds, and the work you're currently doing related to emerging payments?
Sure. Thanks, Chris. My name is Andrew Gómez, and I work for Lipis Advisors. We're a payments consultancy based in Berlin, Germany. We specialize on payment system design, modernization, payment strategy, and we serve clients all along the payments value chain all around the world. I think what makes us really stand out is really that global perspective. We work on every continent, and I personally monitor around 40 markets.
I'm glad to be here with you both. I'm Mark Dixon, and I work for a payment association, NCP, based out of New England, where I primarily focus on developing and running our education department and offerings as they relate to payment functions and services, which includes what's happening on the payments innovation front. I also do advisory and consulting work for our subsidiary, NCP Payments Group, where I work with clients on solution implementation, process improvement, and strategy.
Thanks. See, I told you these guys are experts. Thanks for the overviews and the background. Now let's dive in and let's begin by defining what are emerging payments and are they the same or different than traditional payments?
So generally speaking, I would say emerging payments are inherently electronic in nature, right? If they weren't electronic, they probably wouldn't be emerging, right? Everyone's had cash, and we've had that for a really long time. I also think the emerging payments go beyond, say, the simple check or card-based systems that many in the U.S. are so used to. We've had checks in the United States for a long time, and cards are not exactly new either. So when I think about emerging payments, I'm thinking about things like P2P payments, such as Zelle, pay-by-bank solutions, which we're seeing growing a lot in places like Europe, Southeast Asia, et cetera, as well as, say, open banking-based payments like those offered by online payment providers like Klarna or Trustly. And then, of course, we also have the crypto-based solutions or, stable coins or, emerging CBDCs, central bank digital currencies. At a fundamental level, these payments are all the same in one way or another. Essentially, one party is exchanging value, whether it's a good or a service, in exchange for some type of value itself, such as, again, a currency. What makes them different, of course, is all the other stuff in the background that we as consumers or small business owners don't necessarily think about on a day-to-day basis. So things like method of initiation, right? Whether it's a mobile phone or online banking, maybe it's an embedded wallet in your smartphone, et cetera. In the background, of course, this is what makes the payments really, really different and also makes them more or less useful for certain use cases. And actually, that's where I think things become really, really interesting and where we have a lot to discuss.
Yeah, and I would just add to that emerging payments are part of that greater financial services disruption that we have been seeing for the last decade or so, at least in the United States. pretty much since the emergence of smartphone type of technology. And this disruption and convergence is really what's reshaping the nature of banking and ultimately payment functions within banking. So while real-time user experience is nothing new, we are now seeing a need in the industry for real-time posting as well, which is why the US has adopted the RTP and FedNow, contributing to these new payment options and experiences.
Yeah, and just to add to that, I think of emerging payments as like new, innovative ways to conduct financial transactions. And for me, this includes things like contactless, biometric, Internet of Things, wearables, QR codes, and really any other method that provides consumers with a more secure, convenient, and an efficient way to make a payment, just like you guys said. So you both mentioned P2P and wallets. Can you explain a little bit more about how P2P and wallets work, and really what do they do for payments?
So I personally find mobile wallet solutions probably the most interesting out there, especially those that are embedded within the banking app itself, say like something like Zelle, for those customers who are with one of the owner banks of Zelle. Or there's also the standalone apps. So these are apps like say Bizum in Spain or PromptPay in Thailand, or the various Pix-enabled solutions in Brazil. What I find really interesting is this need for instant and this automated notification about when a payment goes through. Gone are the days where you call your bank 2 days later and say, hey, did that payment go through? Because my biller hasn't updated the website, and I wanted to make sure I got there on time. With these solutions, within seconds whether the payment went through or not. And so there's just a better user experience that flows from this. When we look at, like, say, domestic instant solutions, whether it's FedNow or RTP, or in the US at least, or in other markets, we see that proxies are really going to be a formidable or really inherent issue when it comes to how payments are initiated. And the very simple reason for that is, I doubt, maybe the two of you, because we're all payments geeks here, but most people don't memorize their routing number and account number. Being in Europe, I don't memorize my IBAN, although there have been times where I actually did know it by heart. And so, but we all know our phone number, we all know our email address, and we're also, for the most part, comfortable with sharing these with other people. And so using these aliases can be a really great way to make payment initiation much easier. And I think that's really important. And Chris, you mentioned earlier, whether it's a QR code, other innovative ways, or contactless payments, to initiate payments. And in certain use cases, that makes a lot of sense. In others, maybe not so much. But there are different ways of making these payments, and tying that to a mobile app, I think, is something we're going to see a lot of growth in the next 3 to 5 years.
And personally, I find the data implications to be really interesting when we talk about payments. So up until just recently, most payment systems have done a really good job of carrying the payment information, but not really a great job with the story behind the data to what do you do with the payment once you receive it. So as we look at these emerging payment models that are used in conjunction with the global movement towards the ISO 20022 data standard, I see a future where functions like accounts receivable and accounts payable and overall remittance details of payment travel more easily along with the payment, creating future efficiencies with intake systems using the information to automate the reconciliation process. And this can have huge benefits in making transactions quicker and streamlining clunky manual processes that we see today, which is part of the reason that, at least in the US, that checks seem to prevail when it comes to business processing. And I also see this as a benefit to the financial services industry, in that they can ideally get more meaningful data related to transactions they process when it's all more in a standardized format and more data rich.
Yeah, and I think you guys both mentioned, the P2P with the wallets and the ISO 20022. I mean, I think it'd be hard to argue and say that those aren't at least in the top 5, at least of conversations right now, because we talked about convenience and other things that consumers and businesses want, and both of those bring that. So can you guys think of any other emerging payment solutions or technologies that you think could also have a big impact on payments? And what are some of the most exciting emerging payment technologies that you've seen lately?
Yeah, actually, to piggyback off of what Mark was saying, with matching up the data with the payment. When I look at open banking based payments, I think this is really fantastic. A great solution is if I go online and I order a pair of shoes, I can get, say, a request for payment where I can log into my bank account and make that payment directly from my account rather than, say, using a card. And then from a reconciliation perspective from the merchant, when I make that payment, it's automatically matched to that payment. So gone are the days of maybe accounts receivable or accounts payable departments having to really go through and check all the individual payment statements and making sure, okay, this one matches here, this one matches. And, there's a lot of room for automation here. Also, when you look at the possibilities of not just open banking in terms of, say, e-commerce, but when you also think about taking all that data from my my bank account and then transporting that to third-party providers, whether it's a price comparison website or maybe a bank to get a personal loan, or maybe even using the KYC data that my bank has on me and then using that data to validate my identity to some other provider. Banks already hold so much information on us. But up until the last few years, this data was locked away and it wasn't organized in such a way as to allow us to use it for other, let's say, not directly related bank services. And I think use this data, the structured data, really provides a new, let's say, push to use this data for other services. And I'm really excited to see how that's combined, again, with just the payment of moving the money from account A to account B.
So when I examine the whole open banking model, I think it's a great segue and a great piece of this whole discussion, because I look at them in two different ways. So the first way really does align with what Andrew was just talking about, and that we have the potential to open up innovative banking solutions that are end user led and not so reliant on the traditional banking structure to use. So, when you think of the traditional fintechs, they're integrating into financial services that are offering innovative solutions. That's kind of the model that you're talking about. But I also think that this is a great way to give back the power to the consumer and businesses when we're looking at those types of transactions. But the second way I look at this movement is with the benefits to financial institutions. And as we look at like that next gen banking model or the evolution of the financial services industry, open banking allows them to be more innovative as well and capitalize on those non-related technologies that might not have been in their existing technology ecosystem. But they can gain different types of efficiencies and establish different operating models, establish new payment-related services, as well as other types of financial services. I've heard of some, marketplaces that are being developed that financial institutions can leverage as well, which integrate in through APIs, creating more of an FI-driven open banking approach. So I think that's another exciting way of looking at the open banking model. And I think it just further helps us evolve the industry and move it forward.
Yeah, and data could be one of those topics for a future Buzzcast, right? Because really, there's a whole bunch of talk about there. But with open banking, do you guys think we'll start to see it become more widespread in the coming years? Like there's a lot of hype around it right now. And Andrew, I don't know, because you mentioned you're in like 40 markets. Like, do you see a difference between international versus the United States? And again, back to, how widespread do you think it'll become?
So I think we are already seeing it a little bit in the United States. But I think you're right, Chris, that we're seeing it a lot more in other markets. If you look at Europe, the PSD2 and, the upcoming PSD3, it really forced banks to make data available. It didn't work from day one. It took several years. PSD2 was passed in 2015. It wasn't fully implemented really until 2020. And here it is 3 years after that. We still haven't seen the full potential. But we are starting to see that open banking is enabling new types of payments to be made, that new products and services around data exchange are coming. When I look at the US, the US is just such a large market. It's really complicated. There are thousands of financial institutions. It's never going to move as quickly as a market like, say, Slovenia, which has four big banks, something like that. And so, it's not fair to take a country the size of the US or a market with, 10,000 financial institutions and compare it to one where there's literally a handful of people that can sit at one table and make a decision. That said, there's also just the difference between the way legislation is pushed, or I should say not legislation, but how actions are taken in the US. The US is very market driven, and that means that things are a little bit messier. It takes time before the market really agrees on the solution and it moves forward. In Europe, they're a little bit more regulatory heavy, and things are forced with less participation from, or at least less active participation from the market. Not to say that there isn't a market, but there's a lot more give and take there. And so I think it's just going to take the US a lot longer to move forward. I'd like to think that the US is kind of like an aircraft carrier. It takes a really long time for that ship to move and turn, but once it does and it gets going in one direction, it's really powerful and can do quite a lot.
And I do think that we're seeing an evolution of the financial services industry. I do think that open banking models are going to continue to prevail in the United States. I am seeing it a lot even with our members. We have a lot of smaller financial institution members that are primarily located in the Northeast. They're all examining different ways of strategizing on this front. One of the other challenges in the United States is that we tend to have a heavy reliance, especially for smaller financial institutions, on their core service providers. So they're contingent on what they're able to do with those core service providers as far as integrating into their databases, maximizing the usage of open banking type models. But again, then you still also have the model of fintechs and other parties coming in and kind of mining out the data themselves too. So I do think it's an evolution, and we'll just see how it kind of progresses. But to me, it's really an integral part of how we're moving towards next-gen banking models. I think in order for the financial services industry to really move forward, that's where we need to get. However, I do think there's an overarching challenge that I see especially in the B2B space, that even with technology innovation, there does seem to be a lag of adoption and resistance to it as far as moving away from existing payment structures, such as like check payment processing, especially in the B2B space. And I think it's really about that data. So tying back to my previous comment, there are challenges in being able to automate those accounts receivables and accounts payable functions for businesses. And then there's costs associated with them taking emerging technology and integrating it into their environments. So it's great when we talk about like rails like FedNow and RTP and the potential benefits of how they could automate those different functions for businesses. But if the businesses are not willing to invest in the technologies and updates to their infrastructure because it's not cost effective, it's going to cause a delay. So I personally think that piece of the challenge is probably going to have to be resolved by financial services. I think they're going to need to find ways to make it innovative, seamless for businesses, because I don't see a lot of like the bigger businesses, if it's going to cost them millions of dollars to revamp their infrastructure just to automate an invoice posting, they're likely not going to see the benefit of it unless they see high volume transactions that are really going to make it make sense for them. So I think financial services are really going to need to drive that portion of it forward.
Yeah, and when you think about all the changes that are occurring in the payment space right now, I can't really think back of a time where there's been so many all at once, like some of the things we're talking about today. So how do you guys think that emerging payment solutions and technologies will shape the future of payments?
Yeah, I think Mark made some really good points there, that the financial institutions can offer everything they want, but until we see adoption either by end users like consumers, or the implementation and the required modernization, but from the business perspective, we won't necessarily see that much change. However, I do think that we're going to see increased levels of competition and innovation due to these changes. And I don't want to say that a business is going to survive because it has a more efficient, accounts payable department or accounts receivable department, but that's not enough to probably keep a business alive. But every little thing helps, and I think offering a better customer experience. So think about an online broker that allows you to fund your brokerage account using an instant payment, rather than having to wait for a next day ACH payment, for example. That's a better user experience. So could that help them get customers? For sure. And so I think we're going to see a lot of challenges around that. I think things like new business models. There's that old cliche of creative destruction, which I really do think is true. We're gone are the days where you can do everything by snail mail, like say Blockbuster. We have Netflix now. So I think we're going to see a lot more competition. We're going to see a lot more innovation around technology and the new payment rails that are live. And I'm sure there'll be even more things that neither of us have even thought about or mentioned today. And in 5 years from now, we're going to say, how did I miss that one coming? But it's an exciting time, and there's a lot of change coming up, I think.
And I totally agree with the sentiment on partnerships and collaboration, because that's where I see as a way to drive the industry further up in the future and evolve it. I kind of coined that next gen banking as my go-to kind of way of describing it, but I really think of that as where we take those old models of yesterday and even some of the ones that we are seeing today, and we need to make a way of a different kind of banking experience. So I think of that as part of it, including ensuring that the end user has more control. And I know, Andrew, you brought up that point multiple times. And traditionally, banks wanted the entire customer or a member relationship. And I do still hear financial institutions talk about that today, especially when we're talking about competing products and not wanting to endorse or make them easily available. Think of like a fintech marketplace where some of those services might compete with their traditional offerings. And I do understand their concern related to that type of environment, and do know it's not always simple and easy when we bring branding into the conversation as well. So as far as the identity of who's actually providing the services. But one of the things I do think that are restricting those options for the end user is not going to be a solid long-term approach. If you restrict what they're able to have access to, you're going to make yourself less viable, less desirable, because there are different types of customers that we're talking about. There's people that want different solutions that are more online driven, or they more of a mobile experience. There's others that still do want a more traditional banking experience. So I think ultimately FIs just need to be creative and innovative in today's payments related landscape in order to really capitalize on all these factors. And I think they just need to look at it not as they have traditionally, but as they need to look at it from the future of the industry.
Yeah, and that's one thing that excites me about emerging payments is that you guys pointed out, we've seen the shift where the consumer and businesses waited for the banks to introduce something new. And now I feel like it's the opposite of that, right? It feels like the banks almost have to keep up with what the consumers and businesses are asking for. And then you throw in the mix the fintechs, right? Those are the ones that are providing those solutions that are really turning this, upside down. And the other thing about open banking that I like is, sometimes people ask me, do you even have to be a bank to offer banking services, right? And that's probably another subject for another day. But all the things that you guys talked about, I think, the future is really bright, and I'm excited for the payments industry, and I really can't wait to see what the future holds. So Andrew and Mark, I want to say thank you so much for joining us today and sharing your thoughts and insights.
Thank you, Chris.
Yeah, it was a great conversation. I appreciate being part of it.
Yeah. Well, folks, that's all the time we have for today's episode of the Alliance Buzzcast. Thanks for tuning in. Be sure to join us next time as we continue to explore the latest trends and technologies in the world of emerging payments. Thank you.
Thank you for watching Buzzcasts, a program of Nacho's Payments Innovation Alliance. Buzzcasts are for informational purposes only, and its contents do not constitute legal or financial advice. Opinions expressed are not necessarily the views or positions held by Nacho. All rights reserved.